Welcome to TheoTrade. This is Don Kaufman. It's December 30th, 2019, and you are watching the TheoTrade evening video. Moments left inside of today's trading session with the S&Ps down right about 15. You know, little sell-side activity being sparked toward the year end is kicking up a bit of volatility. Let me take you through precisely what we see today on an intraday basis and then project forward from there. So with that, the S&Ps are down 16, but you know, it's holiday trade, right? It doesn't matter, or does it? Because one of the things that I wanted to point out with this is that there's actually some decent volume over there. In the next 4 minutes, I expect us to crest clean through 1 million S&P futures contracts, which, listen, you normally wouldn't expect that on, again, some more holiday-driven kind of trade. In fact, you have seen some decent volume kind of emerge really from last Friday and some follow-through into today's sell-side activity. It kind of, begs that question, though. Is there going to be some selling into the new year? I mean, listen, we haven't had a down day in umpteen trading sessions at this point. In fact, let me zoom out for just a second to show you kind of the full picture over here. 2 down trading sessions in pretty much since early October. Nevertheless, a little bit of sell side activity over here, but that's neither here nor there. Just because the S&Ps are backing off a couple of points, are there signs again of risk emerging? Well, one of the areas that you really have to look at is where the selling is occurring. So it's all right now about, and there is some real damage being done here in the monsters of tech. Now, if you're unfamiliar with our terminology here at TheoTrade, the monsters of tech, and I'm going to go ahead and close up this left side bar, is a conglomerate symbol. It's an index that we effectively built. It's Facebook plus some Apple plus Microsoft and Google. Throw a little Amazon in there. What do you got? You got the monsters of tech. Because these underlyings are so pivotal in terms of market cap, we created our own effective index product. And you can see, of course, the monsters of tech down about 0.8%. However, they are well off the bottom, which was hit very early on in trading today, fading a little bit towards the close, but nothing to speak of. All right. At this point in the game, okay, it's important, okay, to note the monsters of tech, yes, is where some sell-side activity was sparked. And that's very specific to today's sell-side activity in the Nasdaq, a little bit in the S&Ps. But from this point forward, it's all about the financials. And the financials have remained strong today relative to the rest of the marketplace. Now, does that mean the marketplace is going to hold up as we actually hit the new year? Specifically on Thursday, you've also got like Fed minutes coming out. It is all, okay, and I cannot stress this enough, about the financials at this point. You have to look at the financials being down 0.3%. They're actually holding the S&Ps together. If the financials were down on a percentage basis in confluence with the monsters of tech, I mean, you'd be looking at the S&Ps down 0.7 to 0.8% themselves. There's one other really important kind of aspect over here is that we are actually seeing correlation coefficients in the broader marketplace, and I think most people are missing this. They're almost, okay, full boat. That is, this is kind of what you see into a full court press sell side activity, hideous kind of trading day. What I'm getting at, again, here's correlation. Effectively, what we're seeing is, what do you got? The S&P 100, 9 out of 10 stocks are down, and the financials, they are starting to move here, but they have held up, again, relative to the rest of the market, specifically today, extremely well. One other look I want to give you, all right, happens to deal with what we term expected move. And I'm going to zoom in very, very tightly here, okay, to kind of display this to you. Now, maybe a little bit too tightly there. As we kind of zoom in here, and once again, I'm going to close up that left side bar to give you a better look. I want you to see that last week still saw a fairly substantial rally in the S&Ps. I mean, the marketplace closed at the upper edge of expected move. Now, this line representing, for instance, the S&P 500. The financials, however, okay, lagged last week. The financials, though, right now, sure, they're seeing a little bit of selling, but it's nothing big. You have to really pay attention for the remainder of this week. I don't care if it's a holiday session. People, this matters. Pay attention to the lower edge of the expected move specific to the financials. It is right on 30.34. Breaking below it would be quite dire. There's the closing bell. It would actually be dire, if you will, for the broader market, specifically the S&P 500, would feel some real stress and real pain if the financials were actually to crack under the expected move. All right, I want to spin this back around for just a second. S&Ps, again, nothing too crazy into the close over here. Next, we got to come down to volatility. I mentioned just a moment ago just a little bit about volatility. Well, net volatility, it's up. And we look very often at things like volatility futures. And again, sometimes I like to zoom in very, very tightly to show you the overemphasize, if you will, the last couple of trading sessions. Volatility specifically spiked, but it's neither here nor there. Listen, volatility is just a function. The S&P sold off. Volatility comes up a little bit. You could look at the VIX all day long. Okay. The VIX in the last two trading sessions spikes a little bit. I think what's more important to me, though, is the VVIX. This is the volatility of the volatility index. Okay, what's important at this point in the game is it's just holding kind of pat. Now, this is very similar, if you will, to looking at the financials. The financials backed off mild. Okay, it's nothing at this point. And the VVIX, it didn't react necessarily to today's sell side activity. So before you get, your bearish caps out and start plunking them on for the new year, you better believe there might be some selling into the new year. But you're going to need things like the VVIX to take off to the upside. And it's going to do that only if the financials start to feel some real pressure. Again, you have the entire marketplace fixated, if you will, on specific monsters of tech, the Microsofts, the Apples, the Facebooks, the Amazons, the Googles. And I'm telling you, the irony of all of that is not what's driving trade. If that were true, come on, the rest of the marketplace would be getting crushed today, right? And there was a point, again, the monsters of tech were down over 1% on today's trading session. Okay. Nevertheless, it's, hey, the S&P is only down 13 on the day. Well, I can sit here and I can dream about selling in the new year all I want. But I need, again, those financials to play a much larger role. All right. So we talked a little bit about volatility up. Okay. But nothing too substantial. I also want to show you specifically inside of the VIX. All right. And the VIX options. They did 247,000 contracts today. So they're rocking out there, no question about it. By the way, the reason I'm looking at the VIX and the VIX contracts is because it pertains, all right, to the VVIX. So a huge amount of size traded today, 1.6 times, okay, the last 5 trading sessions. Now, granted, the last 5 trading sessions, well, they've been around holiday trade as well, but we're doing about 1.6 times the normal size. So the reason that I bring this to you is, again, the size that's trading in the VIX is not influencing the VIX volatility, which is the VVIX, all that much. So once again, we're caught in this kind of like, a little bit of a catch-22. You see a bit of sell-side activity. The monsters of tech are taking a hit, but the financials not playing a larger role in that. Listen, we've also got to spend just a moment discussion of the bonds. The bonds today traded, again, fairly substantial size, at least for holiday trade, but they also traded a fairly monumental range, something I don't think anybody was anticipating on a holiday trading week. The interesting portion of the bonds is there was a period of time today where they had a positive correlation with the S&Ps. That is, the S&Ps were selling off, the bonds were selling off. All of a sudden, the S&P started selling off a little harder. The bonds actually reversed and started to rally back up. If the bonds continue to go a little bit higher, all right, for example, you come in, on Tuesday, you come in on Thursday, and the bonds are rallying at all, that unto itself is enough to spark sell-side activity in those financials. Again, market, it's all about the financials at this point forward. they see selling. The S&Ps are destined to see some sell-side activity in this new year. Thanks everybody for joining us here at TheoTrade. Happy New Year.